Well, welcome to this week's Nebraska Soybean Board Weekly Market Roundup, which is, of course, brought to you by Nebraska soybean farmers and their checkoff. I am Bryce Duskett this week, filling in for Susan Littlefield. We've got a star-studded panel lined up waiting to discuss these markets as we welcome Kyle Bumsted as well as Jeff Peterson to the screen. We'll get to the whys of the markets, break down what's been happening here coming up in a moment. But first, we bring you this message from the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back as we join Kyle Bumsted and Jeff Peterson. Kyle Bumsted, of course, trading under Allendale, and Jeff Peterson, he is the president of Heartland Farm Partners. Jeff, I'm going to come to you first. This is the weekly roundup. I want to get an idea of what's been happening with these markets over the past week, so I'm going to turn it over to you to share with us a little bit on the grain side of things. What's been happening in this week's trade?
Yeah, Bryce, it's been an interesting week. It's been a volatile week, and it's nice to see that we've got a little bit of strength coming in the market as we end this week across corn, soybeans, and wheat. You know, currently we've got July corn up 7.5, new crop up 6 1/4. Over on the soybean side, you know, soybeans up about 18 3/4. But the real strength comes really over out of the Kansas City wheat up 34 3/4. We've also got some strength coming out of Minneapolis up at 22. And what's been really interesting to watch this week is we had pressure on the market coming into the early week. And if you really think about it, it looked like that pressure was going to continue to push down just because we're at that time of year where it looks like, you know, planting was going to pick up pace. It looked like we're going to see some better weather coming in. And then on top of that, it looked like we had some potential for some rainfall to come in and hit some of the dry areas that have been out there. But then we ended up having the drones that ended up coming in around and getting shot down by the Kremlin. And all of a sudden the market, when we saw that, the market went ahead and bounced. And what's really important right in and around that is we're also trying to go through and get the extension of the grain corridor. So I think everybody's really nervous about what's going to happen there. And because of the fact that Russia is blaming this on Ukraine, Ukraine's denying it. And as a result of those things, everybody's going, well, are we going to be able to get the grain corridor extended or not? And that kind of set the tone for where we ended today.
Yeah, I'm glad you brought up those factors. We'll talk about those a little bit more in depth here coming up in a moment. Jeff, appreciate that. But now let's turn it over to Kyle Bumsted. And Kyle, when it comes to, we would like to ask you all the livestock questions, see what kind of crystal ball you pack to answer some of our questions. But first, let's summarize the week's trade. What's been happening on the livestock complex?
Well, it's kind of a rough week here in both the live cattle and the feeder cattle complex. Feeder cattle for the week, August feeders down $9.30. June live cattle down $3.55. The August live cattle down $4.27. And this is kind of some follow through here. We saw from last week here, we saw some reversal patterns on the daily chart start to form. Now, the weekly chart's starting to look a little bit ugly here on both the feeders and the live cattle to an extent, but I do think that June, given the cash has softened up here just a little bit, we trade a lot of 172 to 176 here in the Southern Plains here as far as cash goes. We've traded, 281. We've traded some 282, 283 on a dress basis here in the Northern Plains. We could have potentially put in the top of the cash market here a couple of weeks ago. But with that kind of basis we're running, I don't know as the June contract is going to fall out of bed too far. I think we could find some decent support down that 158.5 to 159, 160 area. But like Jeff was saying early on in the week, we did see a lot of pressure on these markets. But I think there were some underlying issues there as far as commodity wide with some of these banks potentially going under and some things like that. And I think there was a lot of liquidation. And I think cattle took some more liquidation versus the grains, because when you look at the non-commercial positioning on here, they have had a larger, a lengthier position as far as the live cattle and the feeder cattle complex. And then switching over to hogs, hogs have been a very tough market here recently, and bull markets don't make new contract lows, and hogs keep seeming to make new contract lows here by the day almost, it seems.
Yeah, that continues to be a tough market. Maybe we'll get some time to talk more about the lean hog market coming up here in a moment. But Jeff, I want to go back to you as we talk about the grain market, and Kyle will get some of your thoughts too here. How much of what we saw over the past week, as you alluded to, is some of these outside factors putting some pressure on the grain markets versus things that are directly tied to production agriculture, Jeff?
Well, I definitely think that we've got those outside factors have been putting pressure on. But the thing we have to kind of realize is that as we look at the fund position, overall the funds had been long on the bean side. And as we ultimately get a little more comfortable with where that South American crop is at, where ultimately we end up coming in on the Argentine production. We know that Argentine production on corn and beans will come a little bit lower yet, but we also know that they had went to a short position on the corn side. So long on the beans, short on the corn as far as the funds. And we did see them just continue to lean into that on the corn side and also lean into it on the soybean side. The other thing we need to mention is that crude oil is off about $20 a barrel now. It has bounced back up a little bit here today and gained a little bit of strength. But anytime we get that kind of pressure from the outside markets, that's put some pressure on the market. And we were kind of like we were taking, all the premium out and we were discounting these markets. So, as we got down and found a base in here, and then we get some technical buying to reverse a lot of those individuals that had shorted this market as it was coming down, they can be kind of quick to come back out of that market. So that's what's kind of gave us in our quicker bounce here, Bryce.
Kyle, let's go over to you. I'm curious your thoughts on what we saw over the past week. Anything setting up to determine long-term trends?
Well, that's a very good question. Now, we did see the Fed did raise interest rates again a quarter point, and they said this is probably going to be the last rate that we raise, last rate hike for a while. So someone older than me is going to have to step in here and correct me, maybe much older than me. But I've heard from the older generation of traders, farmers, and whatnot that when you see the last rate hike, that historically is when you've put the bottom in commodities. Now, that doesn't say we're going to be off to the races or anything like that. But looking at the way the action played out here, we saw most of these markets make a turn midweek around Wednesday. Now, on the weekly charts, it looks like we've put in a spike low. And when we saw that kind of action happen on Wednesday, we started to see a little bit of short covering as far as we talked about here with this short that they'd seen in the corn and the wheat complex. But then coming in here recently, we saw open interest jump higher in corn after yesterday's move. We were up like 21,000 contracts here as far as open interest. So it signaled some new buying potentially coming into the complex. Now, that did help here as far as create some of that technical buying coming in here that Jeff was talking about.
All right, Jeff, let's go back to you. Talk about the situation here in the U.S. Of course, planting, a lot of planting going on around this region in Nebraska, a lot of planters rolling. We look at those dry conditions, though. I know folks like Kyle blessed with some rain over the last 24 hours or so, more rain in the forecast. But how much of these dry weather, this dry situation we're planting into is a concern for you?
Well, I would say it's probably a bigger concern for me. And the thing I challenge our team here at the office every day, as I said, we got to be careful that we don't get backyarditis, because it's going to be really easy, because sitting in around where we're at here, as we go west in Nebraska and it obviously gets drier, we have to be careful, because at this point in time, the market doesn't really care too much about the dryness. What it's looking at is it's looking at the fact that we're going to be able to get this crop in. And the thing that's a little bit deceiving about this planting progress is that we've got basically the haves and the have-nots. We've got areas that are planting at a very good pace. And as you look out to Illinois, the pace that they're going to be at and the rate they're putting that crop in, it's not a record, but it's very fast. And we're seeing a good pace also across Iowa and Nebraska. Now, we're going to need some rain, but the market sure appears like it thinks we're going to pick up some rain, and the weather models show it. But the thing I'm a little concerned about, we know we've got an El Nino setup, which should physically help us and add some moisture, but we know we've got that cool water just sitting there right off that west coast. And you'll hear a lot of people talk about that negative PDO. And as a result of that, we're not getting the storms to come through just quite yet like we need to see. We need more moisture, but it's a little bit early to start seeing the markets too concerned about that yet, Bryce.
We'll talk more about the grains here coming up. But Kyle, I want to come back to you, talk more on the livestock side of things, particularly in the hog market. Smithfield made the news this past week as they announced the closure of some of their sow barns. Gosh, it's a tough situation if you're trying to raise pigs right now with these prices. What do you make of that situation from your opinion, Kyle?
Well, the hog crush has definitely gotten crushed here the last couple of days here with these with the live hogs, lean hogs taking a setback here to $3.50 lower here, and the corn going up. So it's never really a good situation when they're giving away free isolating pigs. If you pay the trucking, you can have all the pigs you want. So I'm a little bit concerned here as far as with this hog complex. The thing that the hogs have going for them is they've been carrying a new record short here as far as the non-commercials here recently. It seems like every week they're just a new record short in this hog complex. Now, at some point in time, there's going to be a catalyst. We don't know what that's going to be. There's a nice round of short covering, and you could see this market pop, $7-8. But we were, knocking on 92 and a half earlier in the week, and now we're sitting down here at 83.75 here to finish the week. So almost $10 swing here in a week. That's really, really tough, and it's going to be tough for some producers out there, especially those the ones that aren't vertically integrated. It's going to be very tough here for the farm guys.
Cattle, Kyle, this week had a challenging start. I think it was described in one of our videos as a meltdown at times as we looked at that trade. I always ask the demand question. Is demand eroding? So a two-part question. Am I asking the right question when looking at the cattle markets? And if not, what questions should we be asking to try to predict what might be happening on the cattle front?
The demand has been good as we've seen box beef prices, during the month of April were just on fire. And we got that backed up here today by this non-farm payroll and some of our job openings and things like that. That just kind of confirmed it here that we had, good demand and that stayed with us. But I do think that setting a top here in this box beef market, potentially seasonally coming up here soon. We always seem to rally here early spring. As we like to fill up the freezer here because grilling season's getting started up here, and Memorial Day weekend's just around the corner, so you're going to see a little bit of buying here for that. So after that, there's not a lot of holidays. We have Juneteenth, but then we have 4th of July that there's likely to be some procurement for. Then we enter into the dog days of summer. But like I said earlier, with the way that the basis is trading, historically we run a $9 cash basis here the first week of May against that June board, and we're all of that right now. Now, next week, historically, we run about a $4.75 to $5 basis against the June board. So we're going to really need to keep our eyes on that basis and what this cash market does, and also on that box and wholesale pork here as far as gauging our demand.
That is Jeff Peterson, Kyle Bumsted, our guests on this week's Nebraska Soybean Board Weekly Market Roundup, of course, brought to you in part by Nebraska soybean farmers and their checkoff.